What is good, guys? It's Rey-Jay back with another video, and in this one we're going to be talking about the SPY, the Nasdaq, the QQQs, and the futures. Break down why tomorrow is going to be an absolutely massive day because we have the big CPI report coming out. I'm going to break down the specific numbers that could come out and how they may affect SPY and the market. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 5 free stocks plus free level 2 data, and you'll also have $0 in trading commissions. If you put in $1,000, you're guaranteed up to 15 free stocks. The offer ends tomorrow, so make sure you check it out before they run out. With that out of the way, let's get on with the video. I did predict to you guys in my previous video, I made a prediction that we would get a nice rally in the markets today, and that is what happened. But I did mention the fact that that could be a possible bull trap. I don't know for sure. And in order for us to know, well, the truth is we just have to see the data. I want to note that, unfortunately, even though there are these nice setups, even though there is a potential bull flag on SPY, even though this could be a bull trap, all of those are possibilities. But technical analysis is not going to let us know what CPI is going to be. And everything that the market does tomorrow is going to be heavily dependent on CPI. I want to break that down. I'm going to show you exactly why and what's going on for tomorrow. To start off, and by the way, guys, I'm going to go over a ton of data very quickly. I want to try to not make this video too long. There's still lots of buying in the markets. The bulls have not capitulated as we're still seeing millions and millions in call volume. Now, if the market makers are around, they're going to be incentivized to push the market up. Why is that? Because we're seeing lots of puts that have been bought expiring on Friday specifically. The market makers want the market to hold these levels, even though there are big institutions trying to short us down. So it's going to be a big fight, a big battle, and all of us trying to trade are going to be in the middle of it. It's going to be very interesting. Specifically for Friday, we have a ton of puts out of the money. Max pain's at 400, and there's a 2.9 put to call ratio. So it's going to be a big battle. The market makers are going to likely not want the market to crash too hard. They don't want too many of these puts to be in the money. So they're going to try to keep them out the money. So that's why I'm saying it's going to be a big battle. Now, tomorrow at 8:30 a.m., CPI year over year, month over month is all coming out. Also the core data. And then after that, we had Fed Logan, Fed Harker, and then the Fed speaker, let me see, Williams also a couple of hours later tomorrow. The Fed speakers are going to react to the CPI report, so please be ready. Everything depends on the CPI data. Now, the consensus is going to be a 5.5% year over year for a year over year for core CPI, and then 6.2% for the overall CPI. And on top of that, we are anticipating an increase, but what matters the most is to what degree we increase. That's going to affect us. There are going to be new ways in which this is going to be calculated. Obviously, food and energy are big ones, and because of how much energy was moving, at least for the month of January, we actually saw an increase in energy. We are going to likely see the overall CPI number a bit inflated, and that's why core is going to be very important. There's going to be a new way of calculating this. Basically, housing is going to make up a bigger part of it. There's going to be a new segment, known as owner's equivalent rent, which is going to be more than a quarter of the total calculation, and it's going to account for more than 44%. That's how much housing is going to make up in it, and used cars are not going to be as big of a factor. Looking at the revised versus original, the original was overestimating during some instances, but the revised is actually saying that the original was underestimating very recently. This does increase the odds of a higher core, but we don't know for sure until the data comes out. And then there are many analysts saying that, oh, it's going to be a big shock to the markets. That really depends on the data. No one truly knows, but it is very possible that they are right. We saw energy increase quite a bit, so that does increase the odds of, once again, a high overall CPI. But once again, guys, you have to remember core is also important. Core CPI is without food and energy, CPI without food and energy. That's why George Ball is saying that, anything under 5.5% would be a short-term upwards catalyst for the stock market. Anything above 5.5% would likely be negatively viewed. So my calculations are showing this. For CPI year over year, 6.5% or higher will likely lead to a 4% crash in SPY, a 4% crash in the market, because that would be a shocker. 6.4 to 6.3%, maybe a 2% drop. 6.2 to 6% year over year would be maybe a 1% move, maybe a very flat close, somewhat green, not too much as it would be expected. And then anything at 5.9% or less is likely going to cause the market to fly. Now, when it comes to this, once again, I want to remind you guys, this is not everything. Even though this is very likely going to be a big factor in how the market moves, core CPI is going to be just as important because we know energy may inflate CPI. So core, anything between 6 and 5.9% will be horrible. We're going to see maybe a 4% crash in SPY if we get a very high core CPI. In fact, it might be even worse. It's going to be very bad. The market's going to take a huge hit. If we get 5.8 to 5.6%, it's probably going to be a 2% drop in SPY. 5.5 to 5.4%, maybe a 1% move in, maybe a flat to 1% move, maybe somewhat green. And then finally, 5.3% or less, the market is going to rally. The market's going to love it. My prediction, my guess is, I really don't know, by the way. I want to make that clear. Next to nobody knows right now. We'll just have to react to the data. My guess is CPI might be a little bit hot, and it's not going to matter as much. And core might be okay. I'm guessing core is going to be okay, but the overall CPI is going to be a little hot. That's my guess. I don't know for sure. So we'll just have to wait and see. What does this mean for the market? Technicals don't matter just for tomorrow specifically. The market is just reacting to CPI. There's going to be lots of manipulation by the market makers. They want the market to be propped up, at least hold up. Big institutions, the big bears, are going to try to smack the market down at the same time. So a big battle is coming. If we're bullish, SPY needs to break 412, break that. I'm going to be watching for a push to 414 to 416. If we're bearish, SPY is going to come all the way down to 410, break below that. There's 408, 405, and finally 400. Once again, depends on the data. I can't really make a prediction. My guess is, I really don't know. There's going to be lots of manipulation. We might see a gap up. If we gap up, be on the lookout for a potential fake out gap fill and a push up or something in the opposite direction. Once again, depends on the data. For Microsoft, I'm seeing a potentially more bearish looking setup, but once again, it depends on the data. If we're bullish, it could get back to 274 to 276, maybe not all the way up there. If we're bearish, we're probably going to fill this gap and come all the way down to 262 in one day. For AMC is kind of in the middle right now. We do have the gap all the way down to $4. If we're bearish, if the market gets smacked down, AMC is going to probably fill that gap in a day or two. If AMC is bullish, AMC is going to try to fight to get above $5 and maybe get a retest of 5 to 5.25. I'm not going to talk about 8. NEO is pretty flat. If NEO is bullish, we're going to retest 10.8. If we break that, 11.3 could come. If we're bearish, we're going to break below 10 and then get to 9.7 and then 9.5. For the triple Q, for the QQQ, all right, if we get a nice bullish move, we're going to break 305, get all the way up to 308, break above that, then we're going to have this 310 to 311 range has some resistance, but I don't think it's going to be as significant if we're making that big of a move. We might see this thing slowly head for 314 again. If we're bearish, there's 300, 295, followed by 290 as major supports of this thing. So please be ready, guys. Finally, for Tesla, same thing. It is showing some relative weakness compared to the market. If we're bullish, 198 to 200 could come. If we break that, there's 205. Then the gap fill around 207. If we're bearish on Tesla, watch 189 to 190 get retested. That zone right there, the demand zone. Break below that, there's 185, then 180. On the VIX, it might get a retest of the wedge. If it does, watch this 19 area could bounce off that. If it's going to remain bullish, we have to see a break above 22 to see this thing fly. On the dollar index, what I'm seeing is we have a nice uptrend on the daily. I think the dollar index, you need to use the daily chart when looking at it. There's a nice breakout above the falling wedge, and what I'm seeing is there's a nice uptrend. There's no confirmation of either direction. It's kind of indecisive. If we're bearish, this thing could come down to this 102 area, maybe a little lower. If we're bullish, it has to retest 104 and break it. If it breaks 104, man, it's going to be bearish for the stock market, and this thing could keep going. Let's see, Google. For Google, we're basically trading back and forth around this 94 area. If we're bullish, I could see Google try to get to 96.7. Break above that, there's 98, then 100. Break below where we currently are, the next major support is 90. All right. If we break below that, I'm going to be watching. There's this gap fill around this 88 area. We could actually come all the way down there to fill this gap down here. And then there's 84 after that. All right, so watch each of these levels very carefully. It depends on CPI. Last but not least, we have the notorious Aapl stock. Aapl had a pretty decent day today. We're actually up almost 2%, almost exactly what I had predicted. I think Aapl, if we're bullish, there's going to be 157 to 160. If we're bearish tomorrow, depending on CPI, watch 152, break below that, there's 150. 152 is probably not very strong support. The stronger support is 150. 150, if that doesn't hold, we're likely not just going to stop at 147. We're likely going to come all the way down to 145 to 142 to fill the gap down here at 145. And we're likely going to see this thing get to the mid to low 140s if it fails at 150, depending on CPI. If we're bullish, 157 to 160. If we're bearish, the 145 could come. Anyways, I want to end the video from there. I don't want to make this too long. Hope this wasn't too much data in a very short period of time. So please be ready, guys. Remain calm, cool, and collected. Do what you have to do, and I'll see you guys in the next one. The market to the moon, because the long-term future is still very bright. And peace out.